Hi, I'm Matt Miller. Welcome back to Street Smart. Standing here on the floor of the New York Stock Exchange, a lot going on today, not just Visa and MasterCard circuit breakers, but Rockwell Collins celebrating its 10th anniversary. We have the CEO here, Clayton Jones, is going to be ringing the closing bell. Thank you so much for joining us.
Thanks for having me, Matt.
Let me ask you, first of all, about the New York Stock Exchange. Why you choose to list here? What is it about this marketplace that makes it more attractive than another as a CEO?
Well, the simple answer is our parent company, Rockwell, listed here, and so we were familiar with the NYSE, and they did a great job for them. We knew they'd do a great job for us. We chose them, and we haven't been disappointed.
All right, so now that we have that market question behind us, we can get into your business. Yeah. It's an interesting business. You make electronics, you make parts for a lot of defense contractors, but also for the commercial airline industry. How do the defense cuts, the budget cuts that we're looking at, looming, maybe even larger than we expect, play into your business planning?
Well, Matt, we've actually been seeing this coming for some time. It was inevitable the war was coming down, and the defense budget would be a bill payer for some part of the deficit. And so we can manage this. This is not a bad day. We've suffered 2 recessions in our 10 years as a public company, and we've come through that, I think, much, much stronger. We've had about 190% total share on return, while the S&P is going up about 3% over that 10 years. So we know how to manage in our company. And with a relatively slow downturn we see in defense, we believe we can do that and optimize that business while we maximize that great commercial business we had, which we think is going to be growing in double-digit almost as far as the eye can see.
Hey, Clay, I want to jump in because I was looking at your revenue growth kind of around the globe here, and your average 2-year revenue growth for most of the parts that you sell into, whether it's Europe, Asia Pacific, Canada, Africa, the Middle East, Latin America, it's going down. That's not good. That's not what you want to see as an investor. How do you turn that around?
Well, first thing, we're focusing a lot of our time and attention on that rest of the world. Asia, Middle East are real fast growers where our commercial business is concerned. That's where most of the airplanes are coming in now that the airlines use, and more business aviation is going into there. So we expect explosive growth in those regions. And while the defense industry is going to come down in the United States, we're actually going to see growth in Turkey, in Saudi Arabia, in Brazil, in India, and we're focusing a lot of our defense portfolios there, and we expect that to grow much faster than in the United States. I think we're very well positioned around the world, and that's where I think a lot of our growth is going to come from.
What do you look at as far as helping you to expand? Is it an organic growth plan that you have, or do you need to do acquisitions here and there?
Well, organic growth is what we do, Matt. We invest about 19% of sales in research and development. About 7 to 8% is our own discretionary investment, and our customers fund the rest of it. We believe organic growth is the best kind. We'll continue to do that. We're plowing a lot of money into new products, into new markets, and that's where our growth is going to come. Maybe some complementary M&A, but primarily we see that organic growth continuing for some time.
Got it, Clay. Thanks so much for joining us. Really appreciate it. Clay Jones, CEO of Rockwell Collins, ringing the bell here on its 10th anniversary of listing here in the New York Stock Exchange, almost $10 billion in market cap.